Alrighty. Hello, everybody. Thanks for tuning in here. So, a lot of people are asking me about this job reduction number. I mean, I don't get it. I really don't. They reduced the jobs from last year by, I think it was 818,000. I mean, the market doesn't really seem to have much of an effect. But if that is the case, it'll probably be bullish for the market because that would show us the economy is worse than we think, and that will give the Fed more, I guess, reason, for lack of a better term, of cutting interest rates. So let's see. I'm just going to look here at the Wall Street Journal. Oh yeah, well, this guy Tim Wells, man, he lies about everything. Now he's got $800,000 that he didn't mention when he said how he lives with his, whatever, blah blah blah. I will move on. Yeah, so there's nothing really here about that story. Let's go look at Market Watch. See if there's something there. I think people are just kind of really baffled by it. I mean, I know I am. It's like, is it a big deal or not? How could these people that get paid all this money be so wrong? Yeah, all right, whatever. I don't see much going on in the news here. I guess we can cover it tomorrow. All right, so anyway, let's look at the market. I actually wrote in my newsletter about this today. This is Charles Schwab. I just think it's a pretty interesting thing where, whenever you see a stock like this that has such clear, well-defined support or resistance levels, if a market's going down or stock's going down, there's just not enough demand to absorb the supply. There's more sell orders, or there's more shares for sale than there are shares to be bought. So the buyers kind of back away. They reduce their prices. They know that the sellers are going to start to get worried and reduce their prices too. So when there's not enough demand or buyers around, the price goes lower. When we get to a support level, well, the tide turns. All of a sudden, there is a lot of support. There is a lot of buyers. For whatever reason, this is the level where the buyers come in off of the sidelines. Sellers can sell all they want. They don't need to worry about pushing the price down anymore. Now, a lot of times when we get to a support level, we rally. Okay? You can see here and here. And this is on my radar screen. It's not a trade yet, but if it gets down to around 62, it'll probably become one. Now, why does the market rally off of support? Well, a support level is a bunch of buyers, right? That's why it's support. It's a bunch of demand. It's a bunch of buyers. Sometimes some of the buyers start to think like, oh, gee, there's a lot of buyers here. That's why the market isn't going lower anymore. So I'm worried that some buyer is going to outbid me. And I know the sellers are going to go to whoever is willing to sell at the lowest price. So that concerned buyer increases the price they want to pay, or they're willing to pay. Others see that and do the same thing, and you get the old snowball effect. So if we get down around 62, I mean, I'd be looking for another buy, probably a trade on the upside. And if we break 62, probably be a good trade on the downside here, because check this out. Fast move up, fast move down potentially. When you get fast moves up and the price eventually returns and comes back to those price levels going the other way, you can get a fast move in the other direction. That's because, look, you can even see here, fast move up, fast move down. If markets are a stock just rips through these price levels really quickly, it doesn't spend enough time there for there to be this like big kind of vested interest to form. So, I mean, this is actually a really good example of it. So check this out. Fast move up, spend time trading at these levels, so vested interest builds, moves higher, get back to these levels where there's a lot of vested interest, trade sideways. Finally, we get back to the price levels where there was the rapid move up through, and what happens? Rapid move down. So, important thing to think about or to understand about markets. Some price levels just are more important than others. Now, let's look at the S&P here. Well, yeah, I even have that. I don't even remember when I put this chart together, but it's kind of the same principle here, right? So check this out. Here's the S&P. We gapped down, ripped really quickly down, even gap, which means that there are price levels that didn't even trade at. So what's one of the main reasons why we get resistance? Remorseful buyers trying to sell to get out at break even. In other words, someone buys a stock at 30, it goes to 28. They say this sucks. I'm losing money. If it gets back to 30, I'm selling. So remorseful buyers placing sell orders is one of the main reasons why we get resistance. Now, if you have a level like this or price action like this, where we just basically collapse through these price levels, if it gapped and it didn't trade there, there's no one who could have bought, right? If it didn't trade there, no one bought. So on the way back up, you're not going to encounter all of these remorseful buyers who are trying to get out. So there's going to be this like dearth. That's my new word. Dearth or lack of sell orders. So the buyers are going to be forced to be willing to pay up. They got to bid premiums. No one's going to come to them. They got to go to the sellers. Now, another technical analysis thing to notice is today was what we would call a bearish engulfing pattern, which, as you could tell by the name, is bearish. Sorry, man. Whatever. So the blue team is in charge, right? These are the bulls. Blah, 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 blah. This morning, it looked like it was going to be another up day. This is where we opened. But by the close, the sellers pushed it all the way back down. And importantly, we got through the prior day's opening and closing prices. That's what makes it an engulfing pattern, because a lot of volume tends to trade on the open or the close. So therefore, those are the levels where there might be support or resistance. And if we could just blow through them like that, it just tells you the sellers are aggressive. Now, we had a bearish engulfing pattern over here. And like I should just go back and say this for a second. This shows the bears are taking over in one day. Sometimes change of leadership takes a long time. Sometimes it happens in one day. So back here, we had the bearish engulfing pattern, and phew, what happened? We fell apart right after. So it was a good signal there. Technically, this would be a bearish engulfing pattern as well, because we opened there and we ended up closing below the prior day's open. So this just kind of shows you that these patterns, they're not perfect. They're graphical illustrations of human psychology. And we all know how crazy humans are because we are them. Unless you're some AI robot listening to me. I guess we could kind of use hindsight as 2020 and say, well, I wouldn't have gotten stopped out because it didn't break below this uptrend line. But the important thing I want to teach you, and I think you should just understand, is forget the name of the pattern. Who the hell cares if this is a bearish engulfing pattern or if it's, in Western terminology, what we would call an outside reversal day? The important thing is the blue team is pushing the ball up the field here. The red team makes a goal line stand and they reverse the momentum. Right. So it's a pattern that shows you that in a really quick time horizon or time frame, the sellers have taken over. All right. Thanks, everyone. I will see you.